Hey guys, welcome back to the video. In our last video we talked about what synthetic are, and how you can sign up your Deriv account and create your demo account and all of that. So in this video, we're going to be explaining the top-down analysis on how you can analyze the market from the higher time frame to the lower time frame, and based on how the market moves, that's how you enter the trade. So I'm going to be doing a back testing kind of explanation so you guys understand how to trade. So this is volatility 10 index, and if you go back to my other videos, my first video I ever made, you see my explanation on SMC. And if you want to analyze the market, you have to make sure you have some key factors in mind, and those key factors are: number one, the trend of the market. The trend of the market, it's the market movement, the market flow. You have to know where the market is going and how the market is moving. So this is an upward movement of the market, and this is a downward movement of the market because market is making a series of lower lows as seen. So if you've gotten the first thing in mind now, which is the trend of the market, the next thing you keep in your mind is understanding the impulse and correction move that makes the movement possible. So impulses and correction, those are the higher higher highs and the higher lows of the market movement. So this is on the daily time frame, and if you can see on the daily time frame, you can see market keep making higher highs and lower lows and lower lows here. Sometimes I wonder why this thing doesn't go straight sometimes. So market keep making series of lower lows, confirming the downward trend of the market, because market has been in a bearish momentum for the past. You can check the time. So you check the time since last year in July, that's on Friday. The market has been on downward trend and that's continued till November 25. So from there, the market changed direction. Now I want you guys to notice something in every single break. In every single break, it's a break in a daily structure. A break in a daily structure. This is also a break. This is a failed high. It's the high that was meant to be taken out, but wasn't really taken out because market sellers had to come in and reverse the whole um, movement. And plus, it was also at a support zone, the previous break. So you can see market movement is actually in line. So if you observe all this, you see this is after a break of structure. If we break it to the upside without a clear text, we have a change of character. So this is your change of character. Change of character tells you that the market is changing direction, and this it's your break of structure, because the next break is going to be a break of structure. As you can see over here, so market keep on moving to the upside, creating breaks of structure. Remember, I told you this break is a failed break, so you can't really use it as a break of structure. I'm setting things in mind. We're using SMC here. SMC is smart money concept, and it's mainly its main focus rather is on first thing take note of is liquidity. Liquidity is what moves the market. Just like I said, you take note of liquidity, you take note of fair value gaps, you take note of supply and demand zone. Although we don't use that here, but no, I'm not going to add that because I don't use that in my analysis at all. So I'm really going to focus on what I use and how I follow order flow. So order block, you keep note of order blocks, and also breakout blocks. How am I saying blocks? That's funny. Breakout blocks. So you take note of these three things when you're I think I have to add some change of character and break of structure. And a break, just let it be a break. A break is a break of structure. You keep this in mind when you're analyzing the chart. So we have a break of structure here. BOS. Then the break of structure created a, if you look at it here, the break of structure created a swing pull before you retest. So that gives you a confirmation that this swing pull is liquidity, and you wait for price to get to that liquidity, or once price get to that liquidity, you know the market direction is about to shift depending on the lower time frame confirmation that we have. So with that in mind, with that in mind, we highlight this as our liquidity, and we go lower to the 1 minute time frame. To see what we have. Sometimes I ask myself why network always slow someone's down, and it's annoying sometimes. Network is kind of slow at the moment, so hopefully we'll be getting back soon. So on the 1 hour time frame, just like I said, my network was affecting me, so I had to switch some things. Go back to our analysis. Let's go back to 1 minute time frame. So after the liquidity pool, what do we observe in the market? We observe that before all this, before these little internal lows, or during the little internal lows, okay, in this internal break. So it's same thing with the rest, internal break, internal break, internal break. Okay, so you can see the only other block. Remember, other block, you take note of your other blocks. So this is another block. If you notice, there's no other candle as a favor lookup. This one. This one is a favor lookup, the imbalance in the market. The imbalance in the market. So this imbalance gives you confirmation that the retest was just a inducement and it is going to be broken down, which price eventually did, as you can see here. Okay. Now if you move to the 15-minute time frame for entry in this zone, because we are confirming a sell after a liquidity pool. So if you go on 15 minutes for entry on this little zone, wow, it's gonna take ages for this thing to load. Going to extend everything backward. It's gonna load. Don't tell me this is the least I can extend to. No, 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 no. 15 minutes is too low. What the heck? No, So we know where the 15 minutes ends, right? So we go on the I'm trying to select it. We go on the daily time frame. We see from what we'll try to analyze the market from there since market doesn't want to allow us to. But you get my point when I'm talking about entry from this point, right? We expect the liquidity sweep, then market moves to the downside. Same thing here. There's always a liquidity that is being taken out before a major movement. There's always liquidity being taken out before the major movement. I'll explain all this as time goes, so you understand. Liquidity being taken out from here. Two major liquidities have been taken out from here before the major move. So following that, we tend to understand that the market takes liquidity before a move, and there are certain factors that determine that move. So all this I'm showing you right here, all these are liquidity have been taken out to for a movement to continue the other flow. So keeping that in mind, we already have a 15 minutes line from here. So from this point, we'll analyze the change of character to the current market movement right now. So I don't waste time in the analysis. So I just want you guys to understand how to use the liquidity fair value gap block breaker, block change of character and breaks to analyze the market, and you know how the market will move later on in the future. So first start from this line, analyze from here. So um on our daily time frame, we notice that market have been making series of higher highs to the upside and continue to make those series of higher highs to the upside. So you can see throughout this point, market was in a upside. So meaning if you are around this trade, you only be looking for buys until the break. And the recent break we had is around here. The recent break we had is around here, which started to shift the market momentum to the downside. So right now you can see market is in a downward momentum. So market has a current low is going to break and might break, may not break, depending. I don't want the market, but what analysis tells us is that market is moving in a bearish direction, and we'll just follow that understanding of how the market is moving throughout that period. So moving down to our 4 hours, we'll try to analyze it from the line I just drew now. 4 hours is on to 40 minutes. So okay, now on the 4 hours time frame, you can notice after this daily break, market did something. Market did something. Market made the break here. After this break, so remember we're only following the upward momentum market. So this is a break. This is also a break. Now, as a trader, your main goal is to find retext after a break, because market moves in impulse and correction move. So this is an impulsive move. This correction move. This is an impulsive move. An impulsive move, correction move, correction move, and the rest like that, and so on and so forth. So keeping that in mind, we'll look closely after making the breaks on the 4 hours. Let's just make it up to point because analyzing all the markets right now. So you know how the markets moves, and this is change of character. So the market structure shift. So moving down to our break. After our first break, as you can see here, market made a pull down to the downside, creating liquidity. Now, all you do is just wait till liquidity is broken, then you confirm your entry. It's as simple as that. You don't need so much on your mind when you want to enter the market. So market broke our liquidity after market made series of higher highs. Market started to move correction. Market started to make correction move to the downside, which is this, which took out our liquidity. Market made a change in shift in movement and created a retext at this point, as you can see. So if you try to connect all what I said together now, sorry I was too fast. If you don't understand, I'll slow down so you guys understand what I mean. So what I was trying to explain is after the liquidity pool, or in the liquidity pool, you can look for 15-minute entry. So we'll go on the 15-minute entry because this is on the 4 hours, or you go on the 1 hour. We'll go on the 1 hour to see where market is likely to retext at after the liquidity shift. Networks are affecting me again. I don't know what's going on with this, and it's constant. That's why it's very annoying. Okay, so this is on the 1 hour time frame now. We are moving to where we expect price to move from. So after our liquidity, was taken, there is no other block after the liquidity. What we have right here is a internal market structure shift. Let me highlight that. Internal shift. Okay. So this internal shift, which mitigated a other block that caused the break of structure. This nigga. So that was our point of interest. Now after the liquidity sweep, or in the liquidity sweep, you go on the 15-minute time frame to confirm your entry after the 15-minute sweep. So zooming in on this. So notice market was making series of lower lows, broke above, and okay, this is the break we're looking for, because market broke below here. So the market structure shift we're looking for was this other block was going to be our entry on the 15 minutes time frame. So if you follow the market well, you notice market retest starts a fair value gap, a the other block that has fair value gap rather. They started move to the downside. Now market was supposed to retest on the 15 minutes. You can see from here, this is where you expect market to retest from, but market broke it. It broke it. And how broke? I was giving you confirmation that okay, the market is starting to shift. So it's either you wait for the movement, or either you wait for the movement to occur. If I take your trade from here, targeting a low like this down to the upside. To the upside. So I'm a top person. I use 50 win to reward ratio. 50 win to reward ratio with at least. So that's our first entry after the liquidity sweep. Going back to 1 hour time frame. So we can see markets even retested that same zone twice. See this area of retest after the liquidity, then after the break of structure on the 1 hour time frame. Because we can use, if you understand the market flow, you know the market is going to retest at this point. So if you use your last entry, the entry zone, because market me another sort of liquidity grab again. So confirming a lower time frame entry. But if you go on 15 minutes in this same zone of 15 minutes, if you enter your 15 minutes, you will see that same entry that I still used to enter for this zone. Because market keep making the same movement. So on the 15-minute time frame, what do we notice? Is there any shift in the market structure? You notice market has been making a series of lower lows, and the main shift that happened is above here, which is this our market structure shift. that happen after the liquidity. Do you understand? So the last low, is going to be your entry after the liquidity shift. So if you're taking your trade from here, you're going to be targeting this zone after the market shift. You're targeting this zone. Okay. And then putting your stop loss below this low. Then you take your 50, your risk to reward ratio around 50 because that's my entry model. So moving on back to the 4 hours time frame, you can see you're able to catch 2 buy setup, clean buy setup for that matter, because you're following the market direction and market bias. So you can see this, it's up to this or 4 hours liquidity. Wait for, let me just highlight it so you guys understand. A 4 hours liquidity is on. So simple as that. We go on the 15 minutes to this zone after it close. This after the sweep. So this zone is going to be a zone of entry. Well, as you can see on the 4 hours time frame, market made a retracement twice to a order block. You know what other blocks are? You know what other blocks are? The fair value gap. So there's a fair value gap here that's created a order block, which markets eventually still retested at. So after the retest on the closing market, we'll go to the 1 hour time frame to observe what really happened at those zones. So going to our area, you can see at this zone there's a 1 hour order block here, which market did retest at on the 1 hour. So this will have been a good win to reward ratio if you know what you're doing, because this will be our liquidity break on the 1 hour. So you can see I'm only using what I wrote here to follow the market. I'm not after supply demand, no. So that's our 15-minute entry after the liquidity pool. So on our 15-minute entry, you can notice something here. You can notice after the swing, there is the market structure shift that happened. Market wasn't supposed to break above this before the movement. So this was the down shift that causes the reaction to this other block. You see, market just literally just bounced off from here and just started to. So if you want to take a sniper entry from here, you're literally catching a very good move, and then your win to reward ratio at 50. And boom, you just got yourself a good move without wasting time. But if you want to take This is just a simple move on the 15-minute time frame at after liquidity sweep. Now, if you want to take a re-entry after a break in structure, because your movement is going to cause a break in structure with this here, because you have to go back on 1 hour time frame. Sorry, so you understand. So on the 1 hour time frame, you can see this a very good win rate too. So market came back to that zone. So we can see market making series of lower lows here after a break of structure. Sorry, after a change in character, because this is on the higher time frame. After a change in character on the 1 hour time frame, market started to make a series of lower lows, series of lower lows, series of lower lows, series of lower lows before making a market structure shift also on the internal structure. Then retext at that point start to the upside, start to move to the upside. So taking advantage of that, if peradventure you miss a trade here, you don't know how the market will move, all those kind of thoughts. If you notice things like this gives you an edge because you're following market movements and you understand, oh, this is a market structure shift that happened in a lower time frame, that happened in a lower hour time frame, 1 hour time frame, that led to a break in structure. Remember, I'm using what I know, break in structure, and that's the only thing I use that led to the other block. So if you are taking this trade, you move to the 15 minutes. Remember, our entry is always have to be 15 minutes. If the entry is only 15 minutes, you don't enter the trade. It's as simple as that. You don't waste your time. Remember, we are moving with the market bias. We're only taking buy signals. There's no space for sales. It's better you have a good setup to have series of bad trades. I've learned from that, and we all learn from that too as time goes on. Every trader we understand. So after the favor lookup you're seeing here on the market structure shift, you can see market created the other block. This other block, this last candle, it's a 15-minute other block. So we take our entry from here. The win to all the way short 50, and yeah, bag yourself another good entry. You just know, if you can follow simple structure, you understand the market. It's just as easy as that. So moving to 4 hours to understand the market movements too. So you can see in just you calculate yourself in just what, 1, 2, 3, 4, in just a single impulse and correction move, you made for good trade. A lot of traders that have done accounts in all this try to understand how to move the market. Like, it's not going to work that way. It's not going to work that way. So getting a good impulse trade is better than a series of random traders not going to get you anywhere. So with that in mind, we notice that after the break of structure, market keep pushing to the upside, like intensively keep pushing to the upside, but on the 4 hours, you just keep making a series of higher highs, lower time frame, higher highs, higher highs, higher highs, uh, lower time frame, higher highs. That was made here. So with the break. So continuation like that for the main structure started to shift to the downside. So if you notice this other block, it looks valid. So this is the last candle that happened, but this simple trick that happened right here, market sweep above, market literally just sweep above before using it. So it was a valid block in the past, but following market movement right here, we see market we tested at a lower time frame of that block, which is 94 hours, before starting to move to the upside. Before starting to move to the upside here. Okay. So we are following what market is saying. If normally you could have taken trade from here, you could have taken trade all the way from all these highs you're seeing right now, but there is no break that is visible on the 4 hours. During these times, the market was moving in the upside direction. During this time, you have chances to take buy. So if you go on 1 hour, you will see only on the 1 hour time frame, you can see a series of break of structure happening, break of structure. You can see a fair value gap, because normally you're always looking for fair value gaps. You'll have taken this trade, but you'll have missed it. So there's no invalid structure really. This is break of structure too. You take this trade and you'll have gotten a good win to reward ratio, because you'll be moving to the 15 minutes time frame at this point to go to see how you enter. Because once price reacts, constantly, always on the 15 minutes frame. Okay. So even though the reaction was small, the 1 hour that block confirmed that okay. Okay. So as you can see on the 15-minute time frame, there was a little break. So you guys see better. There's a little break that happened above here. Where is it? Okay. So this confirmed our market structure shift for a retext to the other block. So if you're taking a trade below your other block, let's say then to your 50 into reward ratio. Okay, that's one. Then next on the 4 hours, we can see a break of structure that led to more breaks of structure. So market making higher highs here. After a break, what do you expect after a break? You expect a retracement to the downside, and that retracement to the downside was possible. But if I'm looking at every single thing, not that's that. So you see the first break that happened here, the liquidity pool that was taken, which is this place. Still on the 1 hour time frame. This is on the 1 hour time frame. Notice on the 4 hours time frame, this is the 4 hours liquidity. so you guys don't get confused during debates. 4 hours liquidity. Then this is 1 hour liquidity. They are different. They are different. They're not the same. This liquidity is on 1 hour. Let me. So on the 15-minute time frame, after this, our first shift after this break, so we have a break. Then you go to 15 minutes. You wait for a market structure shift on the 15 minutes. The market structure shift that happened on the 15 minutes didn't really happen. So we won't enter this trade. But what we'll look for is the 4 hours liquidity because we always focus on 4 hours liquidity. The main structure shift that happened was here, which led to a so the main shift that happened was here actually, which market we tested from. So normally I don't trade from there. Our entry is always around here. After market create a sweep, started making lower lows, 4 hours, lower lows that kept on for quite a while before reaching the point of interest. And the point of interest is, let me, why didn't show you save this order block with fair value gap was our point of interest. So seeing that the market has changed structure at this point, this is our market structure shift. We have confirmed that okay, the market is now going in a downward trend. So we go on 1 hour time frame. You notice after this movement, you notice price started to make retracement zone, started to go to the upside. You know it's going to go back down again. You know it's just gonna come back to fill the point of interest, even if it's not going to react from the point of interest. Take for example, it's just from this point start to go down and me align that way. And instead of even coming up here, just broke it, started to continue to going down to the downside. That could happen, but the best side is that you understand the market movement and you understand market bias. You know that the market is moving on the downside, so you have the opportunity to take it after the market structure shift. So what I'm saying in general is that when you move to the lower time frame, 16 minutes, you go back to the same. So on the lower time frame, 15 minutes, what do we see? After the market structure shift, market made the what low, two lows, and this low. Now this looks to me like a fair, like an order block, but I doubt I will have taken this trade because there was no real support to my reason why I will enter this trade. There's no fair value gap. There's no order block. There's an order block, but it's mitigated. It's already mitigated. So normally I won't take this trade, but whoever will take this trade will definitely get a good win rate ratio. Let me see. Up to 50. But personally, I won't take this trade. What I will wait for price to do is I will wait for price to let's go back on 4 hours. So I'll wait for price to get to my zone. Once price get to my zone, which is this zone you're seeing here, yeah, that's this one you're seeing here. This week, this first week after the break of structure. Let me align this break. Then you go on the 15 minutes time frame. And then we look for market structure shift that lead to an upward momentum. So what do we have here? After the break, we have a retest to the upside. The market keep making that retest to the upside, retested at an order block. If the order block has a good favor lookup, that can be your sniper entry. That can be your sniper entry for a good entry. So if you look at this trade well, you notice the market structure shift that happened even after the break gives you a good entry for a nice win risk to reward ratio from year 6, and you take it because you're taking this, we're using this other block because normally I will have used this other block as an entry. I will have used this other block as an entry. Listen, my risk to reward ratio 6 to 50. 50. Adjusting this to 6, 50. So that's like you're taking two trades at once. The first trade confirms the entry, then the next one delivers a nice gain execution. What do you notice? It's very easy way to notice. What do you notice here? The market structure shift. I still knew that market is moving to the upside. So a break is gonna definitely go to occur. Retexting at the order block that has fair value gap. This is just pure market movement. If you understand where market is going, you understand where it's weak. So this is going to give you a good win to reward ratio if you go to 15 minutes for this entry. Refreshing. refreshing again because I don't know. Okay, it works this time. Okay, so on the 15 minutes time frame, we go on the 15-minute time frame for entry. What do you see on the 15-minute time frame? We see a shift in structure, which market eventually retested. If you notice, you notice, if you go back to all the entries we've entered, markets always come back to either a market structure shift or a order block. On our entry on the 15 minutes here, what do you notice? This was acting on a market structure shift. This is where the market shifted from, and that's where the market retested from. Come back to retest. Same thing here, an order block. So market is just going to keep on making all those structures. So it's literally making all those structures for you so you understand. This is another block. Because if you even look at it on a lower time frame, the lowest of time frame, this is the market structure shift that happened. And this way market started to retest from. So the market structure shift is going to be your entry point for a 50 to 6 stop loss win to reward ratio. That's only 15 minutes. So you keep doing the same thing all over and over again. If you notice here a liquidity sweep, after the liquidity sweep, markets looked for a recent order block and retext at the order block. It's on 15 minutes, so it's easy to see if you understand what you're doing over time. So if you are taking this trade, you'll have won the trade, but the downside is the market shift and you hit stop loss here. So from this point, this is where you know that okay, market has shift momentum. So we'll observe thoroughly on the 4 hours time frame during those periods to see if market really has shifted momentum. So definitely throughout let's say from January 26, that's 2026 this year, Monday, from Monday to Tuesday, you will have noticed that the market has made a big shift, and from there on, market started making a series of low structure. So going back to 1 hour, you know from this point on you're supposed to be taking sales since the market has shift momentum, because from here, so this point you're going to know that okay, market has shifted momentum. No, the market has shifted momentum. So market has no business doing anything with the upside again. So normally I won't have taken any trade from this point because I know that this period is just a phase of realization that okay, this is when the market started to change. So the main thing you're going to focus now is sales. So we look for sales opportunities. We notice a break. We notice a break. And we also notice this little break that happened here, but it's gonna be this. So if you look at the charts where there is nothing to support anything at this point, because The only thing you are looking at is this liquidity. So if you're looking at liquidity, what are you going to be looking at? 15 minutes, right? Always on the 15 minutes. If market doesn't liquidate, don't try to enter the trade as well. It doesn't really make sense. So on the 15 minute we notice breakage of structure, break of structure. Don't put it everywhere. We notice break of structure to the downside. Then the main break of structure, which market retested at the fair value gap. There's no entry here. Fair value gap kept on retesting and kept on retesting within series of that zone is a liquidity zone. So if you notice, you just go back to the 4 hours. At this point, you notice that okay, this is the break of structure and this is liquidity. So if you see that this is liquidity and you know that okay, price has broken through the liquidity and it's going to retest at the breaker, because this zone right here, this zone right here was a valid liquidity, or this was a valid, what do you mean, yes, a valid for that block zone. I might enter in 2 hours. I'm going to enter 4 hours, sorry. For that block zone. Okay. So and the value of that block zone failed. So that makes it a breaker block. And if you go to 1 hour on this breaker block, you notice the other block we have is at this point, which eventually market retested and what I want you guys to know is that after you pick a block on 15 minutes, you're going to go back 15 minutes. I have to really keep emphasizing on that 15 minutes because that's where you guys will understand the main point of your movement in the first place. So when 15 minutes after the break of structure, you notice that there's a break here. And we are supposed to expect a retest from this point. But no, market broke through it and kept on retesting to the downside. Still broke through this. Broke through this on a 15-minute time frame and kept on retesting to the downside. Kept on making lower lows and other blocks. So the main thing is just go for that block on 15 minutes. When you can get out of that block on 15 minutes, you'll be able to get an entry well. So you get the